Hello, my name's Adil. I'm bringing you a review of the German DAX from an intermarket analysis perspective. Okay, folks, so let's have a look what's happening here. Okay, so Mr. Adidas. Okay, as we all know, Adidas, the famous sportswear brand, certainly down almost 15% today. And gave a profit warning. Okay, so that obviously sent the German DAX skidding. Okay, certainly skidded. That's the best way of explaining it. There's no other way. Certainly sent the DAX down. Okay, then we had retail sales that were better than expected. Then we had unemployment data that was worse than expected. Then we had some data out of the Eurozone that overall was better than expected. So it was a mixed day in terms of economic data. Okay. The pro for the German DAX is the fact that the euro has been absolutely clobbering, is at below 1.34, so obviously that bodes well for German exports going forward. Whether or not that obviously discounts the fact that we are going to be losing trade to Russia due to the sanctions, again, that is certainly something that needs to be explored. Okay, so obviously, as we already know, the Portuguese bank caused concerns because it opened down minus 50%. We already know that. Then we also know that Argentina caused concerns with regards to its default. Then we also know that tapering obviously may well have caused, or may well have been, a major factor in the sell-off today. So that obviously caused concerns. And what else can we say? Siemens results were better than expected. Deutsche Bank certainly pushed higher today. So, all in all, really, realistically speaking, there was certainly a very negative catalyst in terms of Adidas and in terms of the Russian sanctions hurting growth going forward. But then there were also positives as well, because you could certainly have interpreted the FOMC meeting as being dovish, because the euro and the Aussie and the Kiwi are certainly bullish. Okay, so that's something that you have to take into account. Okay, so given the fact that's bullish, and even though the employment cost index or the employment wage index certainly rose, still the dollar has remained strong and the dollar itself hasn't remained strong and has actually remained weak. So that's another factor, another variable to consider. So interesting times indeed. Okay, so that's something certainly worth exploring and looking into. Okay, so that's the fundamentals are over and done with. Okay, let's have a look at the weekly chart. Weekly chart, as we already know, we are into bearish territory. We are into the 75% support, which is around the 9390, 9400. Watch out for that level. If that level holds, hunky dory. If that level fails, down we go, down to 9100, 9000. Okay, my personal opinion is that we're going to bounce from 9400 and move higher. That's my personal opinion, and that's the bias that I'm going to be taking into tomorrow. Okay, obviously that's dependent on the fact that Asian markets certainly put in some sort of stability, and we see some sort of support level being held there. Okay, so the next chart is a daily chart of the German DAX. As you can see, lower channel support. Okay, so watch out for that. Certainly expecting a bounce. We've paced the 200 MA. Given the emotive nature of the move today, that's one of the reasons why we paced it. Okay, so we watch out for this channel. This is a channel that I'm going to be observing and keeping an eye out for. Okay, 60-minute chart. As you can see, I'm absolutely shattered. Okay, so 60-minute chart. So where art thou? Where art thou? Okay, so where art thou? So let's see if we can draw our level in here. So there we go. Okay, so that's your level here. That's your upward sloping channel. That's fine. So that's one of your levels. You can possibly draw nothing here, there's nothing there, nothing here other than that. Okay, that's the only trend line you can draw. So obviously we've got some horizontal support here on 9400. There's obviously an unfilled gap left here at the 9592 level, so 9600 may well be a possibility that we attempt to recapture. Okay, and nothing else other than that. Okay, basically lower lows, lower highs, market remains bearish, innocent until proven guilty. 10-minute chart, I can't see anything whatsoever. Okay, There's no positive spin that I can put on this. This is just outright bearish right now. That's the only thing I can explain from my perspective. Outright bearishness. I mean, obviously you've got an expanding wedge pattern there on the downside. So yeah, you can certainly argue that. But until we get some sort of impressive breakout, until then I think I'll remain cautious. Okay, folks. So that's basically your explanation from there. So far, the German DAX, the only thing going for it right now is a cheaper euro, which will help exports. That's the only argument you can make. Although retail sales were slightly better than expected, so that's certainly another argument you can make. Okay, so let's see if we can find any clues from its European peers. Okay, so why do I think the German DAX is going to bounce? Reason why: number one, the H&S formation on the CAC has completed. Therefore, I expect a short squeeze. Hence, that will take the German DAX higher. Okay. The Portuguese index has an inverted head and shoulders, as you can see in the 10-minute chart and the daily chart. Obviously, you can see a bottoming tail. Therefore, the Portuguese index is going to rise. That will take the German DAX higher. The IBEX, let's have a look at the IBEX. Okay, the German IBEX, yes, we have pulled lower, but in proportion to the rest of the markets, we haven't. So again, that's a bullish sign. Now let's have a look at the Euro stocks, because that will give you a good insight as to where we are. Okay, Euro stocks, again, we've hit our H&S formation target. We're into the 200 MA support. We're into horizontal support. I expect to bounce. Hence the reason why the German DAX will bounce as well. Okay, so I don't think I can be more clearer than that. I think that's a wrap, folks. So my interpretation is that German DAX will certainly rise tomorrow off the 9400 level, given the fact that it's a 75% fib. That's obviously dependent upon if Asian markets remain strong, remain steadfast, and remain afloat. Okay, folks. So risk on, risk off, wax on, wax off. Goodbye now.